All right, this is 9/10/2016. Just going to do some review of what oil has been doing over the last few sessions. Okay, as you can see, um, oil has made several bounces off of this 48.50 level over the last few days. Some nice moves here. And these two levels moved from 48.50 to 46.50. So that's a $2 move. And on the 28th, oil moved, did a retracement back to the 47.50 level and then fell off from there significantly on the 1st to 42.95. And from the 1st until the 9th, oil has been retracing back to the 47.50 level. And on the 9th, what we saw was a sell-off from 47.50 to 45.50, which is what we're going to look at today. So we're going to look at this area here from this move here from 47.50 to 45.50 coming from this supply zone. So just to reiterate, we've had several moves from this supply zone over the last few days, a retracement back to supply, and a sell-off from the supply zone at 47.50. So we're going to look at this move on the 60-minute chart now. This is the 240-minute chart. Okay, this is the 60-minute chart. And what we're seeing is the supply zone that we pointed out on the 240-minute chart when the price rallied up to the 47.75 level. An engulfing candle was formed, and that price subsequently sold off from there to the 45.42 level. It went right through the 46.50 level with seemingly no difficulty. We're going to look at all these on a close-up level though. Let's go to the 15-minute chart. Okay, we're on the 15-minute chart, and as you can see, this is our supply zone. This is our reversal point right here. This is our major level that we pointed out at 47.60. We have previous high of day, previous close, and previous low of day. And we'll point those out right now. Okay, so here's our supply zone. This is previous high of day, the green dashed line, which is the price from the previous high of day. That's basically saying that this level, this 47.75 level, is the highest point that price reached yesterday. So today, we're reviewing Thursday's price action. I'm sorry, Friday's price action. So this is the higher day from Friday. And this is the closing price. This is the opening price, previous close, previous open, and the previous low of day price. These levels are important because they can act as support and resistance levels. So in this case, previous high of day acted as resistance. Previous close, when price broke below that, it acted as resistance. This is a major level that we identified on the higher time frame at 46.60. There was some bounce there. As you can see, even here, previous open, it acted as support. And previous lower day acted as support for a second, but then was broken. So another important thing to point out is that the distance between these two, and the distance between previous higher day and previous lower day is $1.95. So this is a $1.95 move, which is common in oil. I would say that happens maybe 70% of the time. We have moves that are $1, $1.20, $1.30, $1.50, and most of the time it never goes above $1.68. So this is on the higher end That would be $1,950 per contract if this entire move from beginning to end was captured. Okay, now we're going to look at this move on the 5-minute time frame just to see what that would look like at our entry points and exit points. Okay, just to reorient here, this is our 5-minute chart. This is the supply zone that we previously identified. This is previous high of day, previous close, previous open, and the previous low of day price. And we have over here, we have our measurement, which showed that we had a $1.96 move. And we have our 200 period moving average, our 100, 50, and 20 period moving averages. Typically, we enter into these trades at 7 a.m., which is New York Open. Sorry, 7 a.m. is not quite New York Open. It's usually 9. So what I'll do is kind of give you an idea where we enter. So somewhere in here. So how would we have entered this trade? Well, this is our previous high today, so we know price is below that. We know that previous close, price was below previous close after New York Open. So then we would look for a entry going down. We know that we're moving away from this previous 47.60 level. So we're trying to enter in on a down move. So you would get in on the retracement levels back into the AVZ zone. So potential entry points would be here. We are below previous close, so we would assume that price would continue to act as resistance. Price broke through the 200 here, retraced back to it. That'd be entry number 1. Entry number 2 is here at a retracement back into the AVZ zone between the 200 and the 100. This is a retracement back to the zone and a breakthrough of the major resistance level here at 46.60. This is a breakdown of previous open and a retracement to previous open level. That's a potential entry. And a retracement to the S1 level. All of these entries have a confirmation of overbought. So on the stochastic indicator, you can see that at these entry points, the stochastic is showing an overbought level. So finally, we'll look at this on the 1 minute and see if there was some micro moves that we could have even more accurately gotten into. And here is a nice entry level where the stochastic is showing overbought. This is the 1 minute chart, and we are acting on previous close, acting as resistance now that it's broken. So that would have been an ideal entry point. This is previous close, and again we see a retracement to the 200 period moving average, overbought on the stochastic indicator, and we're seeing some engulfing candles formed, so that would also be a ideal entry level. And here at the pivot point, we see the price is moving below the 200 moving average, and there's a major retracement to this level at the pivot point, and that would have also been a good entry level. And here we see a major level at 46.55, which was broken by the price, retracing back to 46.55, which is now acting as resistance. Support becomes resistance. Plus, we're below the 200 period moving average, and price is overbought on the stochastic indicator. So this area would have been ideal for entry. Maybe this even better. Okay, here we're seeing a breakdown candle of the previous open price, which is yesterday's previous close, and a breakdown of that level and retracement back to the previous open, a overbought signal on the stochastic, and we are below the 200, we're below the 46.55 level. That would have been an ideal entry point. And finally, we have a retracement to the S1 level, below the 200 period moving average on the 1 minute, and overbought signal on the stochastic, an engulfing candle formation, and a sell-off which broke through previous lower day and retraced back. And that was the end of the move from Friday. So just to recap, we came from 47.75 from the supply zone. Price retraced back to 45.42, which was basically a $2 move, $2,000 per contract. And that is the price of oil.